The fourth Bitcoin halving is officially here. We've reached block 840,000. I'm Natalie Brunell of the Coin Stories podcast, which is powered by Bitdeer, and I'm here today with a distinguished panel of executives from leading public mining companies. Here with me is Fred Thiel, CEO of Marathon, Harris Basit, Chief Strategy Officer at Bitdeer, Tyler Page, CEO of Cipher Mining, Zach Bradford, CEO CleanSpark, Nazar Khan, COO, CTO, and co-founder of TeraWulf. All right, I want to get right into it. So let's talk a little bit about this halving because I think that it can be confusing, especially for newcomers. Can you just talk about how it demonstrates the elegance of Bitcoin's programmatic monetary policy, how predictable it is, and how we've really never had a macro asset that behaves in this way?
Bitcoin halving essentially takes the incentive that was developed to get miners to want to mine and weans them off it over time as transactions and adoptions grows, so that ideally transaction fees would make up the bulk of the revenues for miners. That's the elegance in it.
I think it controls the supply of Bitcoin, of course, which is its primary purpose, but it also forces an efficiency on the industry. And I think that, I don't know if that was a side effect, but I think it's a very good effect. So we look forward to the halvings. I think they're actually really good for the industry.
Part of the genius and the elegance of the design of the protocol is that with the halving, you have fewer and fewer new Bitcoin coming to market, obviously, over time. That actually mirrors real-world commodities in a lot of ways. And so this halving is actually very significant. So with this halving, the amount of new Bitcoin coming to market every year will actually be less than the amount of new gold mined every year. So in as much as people are using Bitcoin as a store of value and thinking of it as being a hedge against governments inflating your money away or any kind of inflation, it's now officially transitioning into an even harder asset in terms of new supply coming to market than gold.
You know, I think that what's amazing about the protocol is how it mimics human behavior and it caters to it in the sense that it drives towards what we drive for. So it's pushing human behavior now towards greater efficiency. It's also pushing scarcity, which we see as increasing value. So when you combine those pieces together, you have something that's now predictable in a way that no fiat currency ever is. We know exactly how many Bitcoin there's going to be. We know when new Bitcoin is going to come to market. And again, it pushes everybody towards more efficiency, which also helps drive value of Bitcoin up on a long-term basis.
Yeah, and part of the ingenuity is built upon the predictability, I think, is unpredictability. Right? I mean, Zach just said, you kind of know, when every block is coming, when a halving, generally is going to occur. But if you think about just where we are today and where we're going to be 2 or 3 halvings from today, if the 5 of us sat here and tried to say, where are things going to be, we'd probably have 27 different answers. And so what's interesting that I find is that layered on top of this very predictable and very disciplined and kind of clean approach is you kind of put real world on top of it. And when you start to kind of layer in what's happening on a macro environment, right, that's where you start to see, I think, kind of the unique properties that everyone just discussed here with respect to kind of how hard the asset is. And so, as we sit here, we're excited about the halving and kind of what's going to bring, because again, for those that can kind of manage through that, there's a tremendous amount of value to be had. So that's kind of, what I find unique and kind of elegant about it.
I think it's important to just look at the numbers too, right? So there's 21 million total Bitcoin by 2140, more than 100 years from now. But only 1.3 million remain. And of those 1.3 million, half of those are going to be mined in the next 4 years. And 1.1 out of the 1.3 million will be mined over the next 10 years. So this next 4 to 10 years is really, the vast majority of the remaining Bitcoin will be mined during that time. So it's an important time, I think, in Bitcoin. Of course, mining stays, has rewards all the way to 2140. Plus, of course, the fees will take over at some point. But I think it's a really interesting time for Bitcoin.
Yeah, and it's been interesting to see some of the changes we've seen in fees and a very different macro environment than we saw in 2020 for the last halving. The Bitcoin industry in general has really matured and grown so significantly over the last 4 years. So what are some key differences that you all see with this halving compared to the ones in 2016 and 2020?
I think the biggest difference is the institutionalization of Bitcoin has driven a different investor class. Up until really beginning of this year, Bitcoin was predominantly a retail investor's paradise, which meant that it was very emotionally driven. Now you have longer term traders working in the marketplace. The ETFs are still 90% retail buyers, but you're seeing institutions now actually look at onboarding. You have one of Germany's largest state-owned banks has just decided they're going to offer corporate customers custody as opposed to retail. Obviously, Michael Saylor has been touting the corporate treasury thing, and more companies are actually evaluating it. So I think that's the biggest change, but that has an impact on Bitcoin's price longer term, which means less volatility in the price. And so the question is, how does the mining industry transition from a business where you're paid to do what you're doing versus you're now just a network that collects fees? And that requires a whole different level of efficiency and a very different business model than one where you just build big data centers and mine a lot of Bitcoin.
I'm going to dig into some of that in a little bit.
And I think the key with that is when you look at scale, I think scale is going to be more important than ever in the coming years. If you go back to the beginning of the last cycle, anyone that wanted to have a startup and wanted to mine Bitcoin could easily get into it. And I think that's actually, if you were to think of the grand scheme of maybe the push towards efficiency, right? I believe it will continue to stay decentralized and in all these different places, but every single operator I think will have to have scale to overcome just the baseline cost of what it's going to take, because then your overhead and it goes further. And so at the beginning, a year ago, all of us could have reached even the very largest miner. It was only 1 or 2 or 3 exahash at the beginning. And now you're looking at the scale and, public miners, we're talking about 20 and 30 and 40 and 50 exahash. And so I think it's changed to where it's fully switching to large institutions, and we're going to see nation states start to mine. We already are, and there's going to be a lot more of it. And so from a competitive side, although it will stay decentralized, I think it's going to be composed of very large players.
Yeah, I think to Fred's point, as Bitcoin grows, it has to access deeper, larger pools of capital. And so it did start with personal things, but it's growing, and there's much larger pools of capital out there than what have been accessed so far by Bitcoin. So I think it's sort of the natural evolution of it, and to support the kinds of Bitcoin prices that we all expect, several years from now, I think it's just natural that it will have to grow.
Coin Stories is brought to you by Bitdeer, where the power of Bitcoin mining is at your fingertips. As a publicly traded leader, Bitdeer's global reach and scale means they're everywhere you need them to be, ensuring you're part of the thriving Bitcoin economy. Bitdeer's not just mining, they are industry pioneers, and Bitdeer stands alone as the only vertically integrated, technology-focused Bitcoin mining company. What does that mean? Well, they're not just deploying, but developing the latest tech to make Bitcoin mining more efficient and effective. With the industry's most experienced leadership team, innovation is in their DNA, and it shows, with a quarter of their workforce dedicated to research and development, pushing the boundaries of what's possible in Bitcoin mining. Now they're leveraging years of expertise in data center and cloud management into high-performance computing through a recently announced partnership with NVIDIA. Join Bitdeer in reshaping the world of Bitcoin mining. Learn more at bitdeer.com and explore how they are pioneering the future today.
I think also the barrage of news that happens in this space, there's so much of it that sometimes you lose track of time. So your question about what's different between the last halving and this one, think about it this way. MicroStrategy hadn't purchased a Bitcoin at the last halving. So that seems like he's been in that trade for a long time. That's only within this halving epoch. So lots of things happen on the path to adoption. So at the last halving, regular questions people like us would get would be like, is the United States going to ban Bitcoin? Now we have Larry Fink on television once a week talking up Bitcoin, and BlackRock has raised an immense, ETF that's outperformed everything. So we're on this path to institutionalization, and it seems to be accelerating. So there are many implications for our businesses, but it's also the rate of adoption is still very, very early. So from a miner's perspective, we run a business that looks on a spreadsheet kind of like commodities production. Except the difference here that I often try to remind people is it's a little bit like if you were an oil producer, but in the late 1800s. The car is just getting invented. So the real use of the commodity is just getting figured out. So it's still really early, right? Bitcoin's 15 years old, but from my perspective, it's still pretty early in the adoption cycle.
Absolutely.
And then to Tyler's point, I think for me, the biggest difference is just the intersection of Bitcoin and the real world. right? So whether we're talking about how it impacts the energy grid, whether we're talking about kind of monetary policy, whether we're talking about how it can be used in different ways. So that's, I think it manifests itself, whether it's adoption or kind of things, it's really that intersection between Bitcoin and the real world. And if you go back for 6-8 years, I mean, there was a small hinterland of people that were believers that have been critical to the space. But now you're seeing, I think, more and more so the average person has is aware of it. They may have a view that's good or bad, but I think that's only accelerating. And to Tyler's point here, as we look the next 4 years, I mean, I think sitting here 4 years from today, we'll probably be saying the same thing again, which is hey, to Tyler's point, it's like the 1800s for the, for oil. And now look at how much adoption has occurred and look at how many more people are involved in a number of different ways.
A global spread, really, right? I mean, we didn't really see much Bitcoin in the Middle East or in South America or places like that 4 years ago. And so I think this increased globalization is important, adoption worldwide. So I think that's going to have a big effect as well.
Yeah, we seem to be at an inflection point. We've also never seen a new all-time high prior to the next halving, right? But fees have increased. And I know they're great for miners, but not so great for users who are watching this, who are listening to this. So what are your thoughts on the fee structure?
Fees are going to continue to go up as transaction volumes on the base level are going to be focused on bigger and bigger transactions. We launched a product called Slipstream, which lets people essentially reserve block space. It's had a huge amount of interest from financial institutions. Why? They want to reserve the opportunity to book transactions in a time frame so they don't suffer slippage. And that's going to become very, very important going forward. At L2s and L3s, you'll see really more consumer transaction volumes happening. This is transactions under $1,000. But think about it. There are fewer Bitcoin than there are millionaires. So there are not enough Bitcoin to go around for every millionaire on this planet to own a Bitcoin. Soon there won't be enough for every billionaire to own a single Bitcoin. And as that happens, the transaction sizes become bigger and the fees as a percentage of the value of a block are going to actually come down. Ordinals are going to move to L2s, all of these NFTs, et cetera, are going to move to alternate layers because they won't be able to afford the fee structure. But the only way mining will exist in its current form is you essentially have to be at a place in 2028 where transaction fees are 2 or 3 Bitcoin per block. Otherwise, the existing model where you pay 2 or 3 cents for energy isn't going to work anymore, and you're going to have to find ways to mine for free.
I think also the use case for Bitcoin is still hotly debated, right? Is it a store of value? Does it optimize transactions, et cetera? I do think, personally, I know there's people that disagree with this, but it's a very valuable savings technology. And so there's a universal need globally for people to convert the fruits of their labors into savings. That's sort of a largest addressable market thing on Earth, that every human needs that. And so the ability to have this decentralized, stateless store of value is, at least my personal view, is sort of the real best use case for Bitcoin. There may be many wonderful layer 2s and things that are built around that to enable transactions, to make remittances cheaper, to do all kinds of things. There are also other fintech technologies that may develop that better. And so we'll see. But to me, of course, as a miner, we always like transaction fees to go up. But I think it probably the layer 2 ecosystem that gets built on top of that may drive the fees up, but it does come down to use case. And maybe over the next 2 halving epochs, we start to see, do transaction volumes gravitate towards other chains? Do L2s take this? And do we see new use cases? We didn't have things like ordinals and inscriptions a year ago, basically. And so there may remain sort of new uses of block space we don't even anticipate yet.
Well, I know there's a huge debate over ordinals, but some people do think there's the self-regulating, self-cleansing mechanism within Bitcoin, right? They get too high, so they decrease, they get affordable again, maybe there's more activity. Is that the case, you think?
That was the case last year, certainly in both May and late November going into December, where you had days where there were some blocks that ate Bitcoin per block in transaction fees because somebody needed to push something. But I think what you're going to find is, people will adapt, innovation's going to happen. There'll be all sorts of exciting things happening at L2s. But at the end of the day, financial transactions, if you think about the UTXOs are on the Bitcoin blockchain. And so that's where people are going to want to have finality for large financial transactions. And as sovereigns start owning this, and imagine a world where Bitcoin is at 1 million, right? Now you have all of a sudden large countries even holding potentially assets in Bitcoin. They are going to want to transact on the base layer, and they are going to be transacting in $100 million blocks, if you would. And so that's why the fees are going to, at the base layer, are going to have to go up.
Something else about that too is, again, if we talk about the human behavior component of this, fees going up actually creates more value for the layer twos. So the layer twos ultimately have to have a reason to exist. And that's why I think that we're going to see greater innovation, because one thing we're good at as humans, as mankind, is solving problems when they're presented to us. And so I think that if it just becomes viewed as either an opportunity or as a problem, I think that's where layer twos develop to be something more meaningful, to allow Bitcoin to be more accessible, because ultimately Bitcoin's value is based on its adoption. And I think that's what we all want, is as many ways for anybody, whatever country you're in, to get access to Bitcoin. That's what we want, that really democratizes this and creates the human component value of what Bitcoin really is.
Right, and I've talked about this on my show before. If you haven't yet, make sure to consolidate your UTXOs. You want to do that before fees continue to go up. I want to turn now a little bit to hash rate, because since the Bitcoin mining ban in China, we've seen more hash rate move to the United States, but also get distributed really around the globe. And this is an ongoing trend. This past year, there has been more hash rate coming online from outside the United States. So what is the driver of this?
Well, we're certainly focused on pushing 50% of our revenue offshore. So we operate on 3 continents today, North Africa, Gulf region. We operate in Paraguay and Latin America, and then we operate in North America. And we're going to continue to grow our offshore business, because the US power markets, between the AI data center craze that's going on right now, the rush to acquire utility scale power sites, is going to essentially drive mining into smaller and smaller and smaller sites and smaller configurations, more automation. And otherwise, the large sites are going to be pushed offshore, where you still have a gigawatt hydro dam that has excess capacity. But in the US, between what Congress is likely to enact regarding energy pricing, there's a huge shortage of transmission capacity in this country. You can't add more generation efficiently in this country. And there are some states where they say, oh, we underestimated the power requirement by 30% for the next 3 years. Those are not places where they're going to enable Bitcoin miners to come in and be good citizens and load balance their grid, because there just isn't energy for them.
I think that we're taking a little bit of an opposite approach, where we're actually finding the pockets, because I think what's important is, miners, we talk about grid services all the time. And I think that the choice between, going offshore or staying onshore is really how much of that service can we actually provide. And to Fred's point, being smaller is going to be part of the requirement. Background being in the microgrid space, where it's about small pockets, I think that's where it does trend in the US. I think that there's the potential for a future where at least innovative grid providers and utilities, there is a small Bitcoin mine that is managed purely remotely, that's immersion cooled, and that you basically have a milk run, where instead of having tech staffed at these large sites, they're running site to site to site in a small geographic area, and they're serving this substation and that substation in this neighborhood and that neighborhood. But technology needs to improve, but I think we'll get there, and that's where I think it does trend in the US. So for mega sites, I think mega sites do end up slowly moving offshore, but I think it's a very long process. I think established sites are here to stay, but I think establishing new large-scale sites is going to be more difficult over the next 4 years.
I mean, if you look at what happened kind of post-2020, I say the low-hanging fruit, the Bitcoin miners went after aggressively. And so those sites that had, an abundance of power, there was an imbalance between kind of supply and demand, 5 of us here at the table plus 15 other people, we're running around the country, I guess, pulling kind of that low-hanging fruit. And so as we look at the landscape today, a lot of that low-hanging fruit has been taken care of. And so some people are looking offshore, Zach said, kind of, looking kind of in scale. But I think the main thing to kind of understand is as the industry matures, we call kind of most of the operations we all do today is base load. Like the idea is that we buy a miner and it runs 98% plus percent of the time. And as I think kind of the decentralization continues to occur, you're going to find that not all mines are going to be baseload. Some of them are going to be designed to operate 40% of the time because that's where their demand profile fits in with what's happening with the broader context. And whether that's 20 megawatts or 200 megawatts is going to be a function of kind of what the underlying supply, demand, and transmission looks like. And so I think what we're seeing globally is that people have looked and said, hey, this is what's happened in the US. Let's take that and let's kind of improve upon it. And that will feed back to what's happening in the US as well. But I think, again, fundamentally, it's that low-hanging fruit was taken off the table. And now you're really having to kind of understand and find those pockets to play. And I think they're all going to be different flavors. And I think as we look 4 or 5 years out, I think you'll start to see Bitcoin miners that are focused on base load. You'll see Bitcoin miners that are focused on kind of mid-merit, right? Because there's going to be that stratification. And their economic models are going to be dependent upon kind of how that works. And so we're seeing that playing out, both here and I think overseas as well.
To oversimplify and expand on that a little bit, maybe. I mean, I think we see it, there's kind of two branches going forward. So remember, of course, our business depends on cheap electricity. That's like 90% of the kind of variable operating expense, right? So if, as long as Bitcoin rewards keep going down, you're going to constantly, when we talk about the drive for efficiency, it's this search for cheap stranded electricity, basically. I think, so there's probably a bifurcation in our mind, at least, that you'll either have to go overseas to places that have sort of vast natural resources, but not enough demand, basically, to soak up all that potential for electricity generation. Or you're going to have to look in places where you can do what Nazar was referring to, the sort of monetizing your flexibility. The thing that's probably, I think, most underappreciated about these companies and sort of Bitcoin mining at an industrial scale is just how valuable it is as a resource to the grid to be able to curtail a large user of electricity quickly. And so what you can effectively do if you stay domestic, as opposed to, so I think there's kind of two worlds. You can go overseas to places that are maybe less explored, and you have to make risk decisions about how stable that regime may be or that source of power, or do they change the rules or add a tax or something changes. Or you focus and really monetize this flexibility. So sometimes we're using the power to mine Bitcoin. Other times we're not trying to run 100% of the time. Other times you're providing that electricity back to the grid. You're selling the power. You're putting it into battery storage. You're doing something else with it. And there's kind of an optimization around that to keep driving your costs lower. So it's one of two ways. But now the mining industry has gotten to a scale that it's so large in the sense that you make these very large capital allocations decisions that take long time periods to pay back. It gets tougher, right? You have to decide where are you going to make your commitment. And it's not like, well, I'll just fire up this rig and if they change their mind, I'll move it down the street. It starts to become a much larger question.
I think it's just natural, right? I mean, most of the world is outside the United States. And Bitcoin mining is one industry that's pretty easy and portable in terms of, it's much easier to place a Bitcoin mine in a remote area than, like, say, an AI data center or something that requires another thing like a semiconductor fab or something like that. So I think a lot of parts of the world are anxious to get technology or leading edge, development, and it's natural for a lot of that to go outside the United States. As Bitdeer, we're still very much vested in the United States and globally, right? So we're going to grow dramatically, many hundreds of megawatts within the United States, but also many hundreds of megawatts outside the United States. But just from, the US is only a small part of the world. So naturally, I think there's going to be a lot more outside the United States overall, maybe not among public Bitcoin miners, but overall than there will be within the US.
Well, there are so many misconceptions around the energy use within this industry, and we're at the Human Rights Foundation headquarters, and they actually have these placards that say not mining Bitcoin is wasting energy. And so I want to talk a little bit about that, because Some have described miners as profit maximalists, profit maxis. You're always going after the cheapest sources of energy, like you mentioned, Tyler. But there has been this growing awareness and really scrutiny about the sustainability of mining operations. What type of energy are you using? Is it renewable? So how do miners find a balance between these dynamics? How much Bitcoin mining is using renewable energy? And what are the challenges that you face in this area?
So I think we're using 55% roughly renewable energy among this industry. That's actually really good, and I think the public Bitcoin miners have more incentive, more desire to use renewable energy than, folks who are not publicly traded. And I think so we're doing a lot. And I think a lot of stuff that we're doing right now is really good, helping balance grid. I don't think that relieves the pressure on us. We should always think about how we can do more. And I think we can do a lot more over the future, right? I think as some of us get larger, more creditworthy, and can establish that we can actually be a source of initial offtake for new renewable projects. And I think that's going to be, that's some place where Google and Apple play today. And I think we can start playing a role there, in the upcoming years as well. So I think we should always feel a pressure as, people that live in this world of how we can do more next year and the year afterwards. But I think we've been doing a lot, and I'm actually pretty proud of the fact that we're 55% even today, right? If we were really profit maximalist, it wouldn't be 55%.
The other thing I think is that eventually Bitcoin miners are going to be energy generators. Whether it's to Nasser's point of you start working with a renewable energy provider and you provide baseload offtake from them until they get transmission capacity, or you do energy harvesting, which is an initiative we've started, where you're taking biomass, you're taking stranded methane, you're taking landfill methane, and you're generating electricity from it, and then you're selling heat. You'll notice I didn't say you're mining Bitcoin. One of the most interesting things we have found is when we engage with governments around the world, and we talk about taking stranded energy, generating heat. 50% of industrial electricity uses for heat generation, and re-feeding that heat back into an industrial process. They ask us how we do it. We say we use electronics to generate heat. They say that's great. We tell them it's mining Bitcoin. They say we don't care at that point, because their interest is in the fact that we're dealing and mitigating something, whether it's biomass from agricultural biomass, whether it's dairies and manures. But there's a huge amount of this out there, a huge amount of methane that needs to get mitigated. And then generating heat, that has a huge implications. We're doing pilots of heating buildings in Finland. We're taking methane off of landfills. We're talking with governments about taking large amounts of corn waste and rice waste from ethanol and methanol production. And this is in countries where they prohibit Bitcoin mining today. But the government is saying to us, no, we want you to come in and do this. Even the beer industry, same thing.
Wow.
This is an issue that's very near and dear to my heart. At the core of TeraWulf, we're a zero carbon Bitcoin miner. 95% plus of the electrons we consume today, come from zero carbon energy sources. And the reason that was kind of foundational to starting of the company is when you look at it, people use kind of the word stranded energy quite a bit, and I think it's a bit more nuanced than that, right? If you think about how the grid operates, it's really the most important factor is overall system utilization, right? If you think about the power consumption that occurs at the peak, it's 2.5x what it occurs, kind of at the lowest point in the day. And so it's less about kind of how, where it's being consumed and how much it's being produced and where, and it's more about how do we increase kind of overall system utilization. And so as Bitcoin miners and kind of as what's been core to TeraWulf is really making sure that our loads are kind of assets back to the grid. We're not burdens to the grid, we're assets back to the grid. And so long as we're doing that, and whether you're doing that at 2 megawatts or 200 megawatts or anything in between, if you're an asset back to the grid, and you're helping with that overall system utilization, you're going to find a welcoming counterparty to work with. And to the extent that you're not doing that, again, whether you're 2 megawatts or 200, size really doesn't matter. If you're not, you're going to find, regulators and governments that are kind of put their hands up and say, hey, not here. And so I think, we need to make sure that as we talk about this, it's not just kind of a word that we say, but really think about like how do we do it in a way that is again facilitating that transition and is providing benefit to others. And when you increase system utilization, by definition, you're lowering the per unit economics for everybody else, right? So I think it's also another misunderstood point is that if Bitcoin miners are doing their thing, they should be driving down the overall cost of energy for everybody else in that area as well. And so that's really kind of core and critical to how we approach and think about things.
You know, something that's not sustainable about renewable energy is the financial model usually. We actually started CleanSpark as a renewable energy company. We were doing renewables with balancing grid projects. And very, very few projects, doesn't matter whether they are utility scale or commercial scale, have any sort of financial return that is advantageous to the end user because it just takes so long to ultimately generate the payback. Part of the reason it takes so long is because of how we use power. You take a commercial building and it uses a lot of power 8 or 10 hours a day. And a lot of times when it's using the most power is the opposite of when renewables are there. And what Bitcoin can do to actually make the financial models of renewable energy more sustainable from a business practice is to be the first user. We can help get projects established, we can help them get funded, but that's where we can have a real change, because otherwise, another thing that's not sustainable, most of these projects to work require government subsidies. And so this allows governments to not have to subsidize the building of renewables, but instead moves that into the commercial space, into private markets, which I think is a huge benefit in the energy markets in general. Because again, when it's subsidized by the government, that ultimately comes right back around to the ratepayer. And so that's where I'm sure many of us have seen it in our areas that we operate in rural Georgia. We can actually help reduce energy prices because of how we consume and use energy on the grid.
And I think one other thing, I agree with what's been said here, but I think one other thing about the industry on this issue that is very valuable is that unlike the traditional data center business, that business model, again, on a spreadsheet, is sort of higher cost, higher revenue. Bigger name companies that can fund things with debt and build large scale, expensive projects. One of the things about Bitcoin mining is this relentless drive to push down costs actually causes a lot of innovation on the edges. So like, for example, on this particular topic, one of our data centers at Cipher is connected to an off-grid wind farm that was underperforming. There is no grid connection. So literally when the wind blows, our machines are hashing. When it doesn't, they are not. So this is a way that basically we can buy power at a higher rate than that wind farm would have been selling to the natural market. This is an illustration of Zach's point that if you build a renewable but you get past subsidies that come from the government, in order for it to stand on its own 2 feet, our industry is very valuable because we're looking for that cheap power. We innovated a way to work directly, basically with just that wind power. And so that's a perfect example of sort of the private sector finding a way that's beneficial to everyone.
It's time for a quick break to hear these messages from my partners who make this podcast possible. First up, Bitcoin 2024, the world's largest Bitcoin conference, is coming to Nashville this July. Join us for 3 amazing days of keynotes, panels, networking events, workshops, concerts, and my 3rd annual Women of Bitcoin brunch. The Bitcoin conference is actually where I launched my podcast almost 3 years ago. You never know what can happen or who you can meet here. Head to b.tc/conference and use the code HODL, HODL, for 10% off. Next up, CoinKite. CoinKite makes everything you need to safely self-custody your Bitcoin, including the Cold Card wallet, the cold storage device I use for safekeeping my Bitcoin. You can verify the source code, it's ultra secure, and it's easy to use even if you're a beginner. Head to their site in my show notes and get a 5% discount with promo code CoinStories. Next up, Crowd Health. Health insurance costs are sky high, and it's money that feels wasted if you don't need a doctor. That's why Crowd Health offers a community-based alternative by crowdfunding healthcare with other Bitcoiners. I get to avoid traditional insurance fees and support real people, not mega corporations. Visit joincrowdhealth.com/Natalie and join us. And finally, the why of Bitcoin is easy to grasp, but the how can be so confusing. The Bitcoin Way is your professional Bitcoin IT and security team that offers personalized one-on-one support to guide you through cold storage, setting up a node, inheritance planning, privacy best practices, and more. Don't take my word for it. Take 82-year-old customer Bill's.
Give the Bitcoin Way a try. You will be well on your way to owning and protecting the greatest money ever discovered.
Set up your free 30-minute consultation with the Bitcoin Way today. All right, back to the show. Well, I want to dig into revenue streams just a little bit because people say the halving is a supply shock, but it's also a revenue shock for all of you that I know you've been preparing for. You're already thinking about 2028, you said earlier, Fred. So the mining industry obviously is extremely competitive. Everyone has to find an edge. I've heard of some companies diversifying the revenue streams by getting into AI. We've mentioned already here on the show, reusing heat from the operations for various purposes. So I'd love to hear some ways that all of you are really innovating so that you can stand out from the pack.
Well, we're doing it in really a number of axes. One is energy harvesting that I talked about earlier, where we're taking stranded energy resources, getting paid to take those, and then selling heat back into processes. The goal is to get to zero cost energy. If you have zero cost energy, you can mine Bitcoin forever. You don't have to worry about it. The other thing is you need to be able, as Zach mentioned, run systems with full automation, full lights out operations. So it's a milk run to services system. So you need to invest in technology. The second thing we've done is invest in technology. We've built everything from our own pool that operates all the way down to the firmware and the miners. We've invested in building the only US ASIC miner, Auradine, and now we've launched a whole line of immersion systems for dual phase immersion. Why? We believe that companies will be wanting to monetize their energy by mining Bitcoin when it makes sense. And when they have that, especially battery manufacturers, we've had a lot of really interesting conversations with battery companies about this. And what that then enables is you will have millions and millions and millions of intelligent devices all over the world that mine Bitcoin every now and again. And they do it at zero cost because they're using their own energy arbitrage. And I think when the intelligence goes down to the chip at that level, which I believe will be available by 2028, this business changes completely, because if you have millions of people mining that don't pay for energy, and you have industrial miners paying a lot of money for utility scale sites, it's an unfair advantage to the small guy. And I think that's where this industry goes.
So I think every company needs to find a way of differentiating itself and adding value over what could be just a commodity business of Bitcoin mining. And in our case, we're going with technology focused very much on the semiconductor aspect. And there's been, I think, very little innovation since 2014. The chips that are used for Bitcoin mining have improved dramatically since 2014, but it's been almost all based on improvements in manufacturing from TSMC. There's been little change in the architecture or the microarchitecture of those chips. And so that's my background. It's also the background of some of the founders of Bitdeer. So we feel like there's a huge disruptive improvement that can happen there. And that's one of the areas that we're focusing on to differentiate ourselves from everyone else.
We've always focused on taking a counter-cyclical approach to both the cycle, but also on, the diversification is a big conversation point right now. And we're choosing to not do it. And what we're instead doing is we're choosing to invest in focus. And what I mean by that is we are always trying to make sure we master the domain that we're on right now, which is Bitcoin mining. We want to have the highest uptime, the most efficient fleet, and be able to run that above anybody else. Now, how we do that without losing focus is having strategic partners. So rather than like Marathon has done a lot of investing in their own technology, we are partnering with other groups, and our belief is that then they can focus on being the very best at what they do, whether it's firmware, whether it's a platform, and then we can just kind of piggyback on top of their success and do what we do best and rely on them doing best. We think that's the best way to really consolidate and use our resources in the best manner.
Running a public company, we generally have a relentless focus on profitability over the long term for our shareholders.
Profit maxi.
I mean, but by responsibility under the law, basically. That's not to say we don't consider other stakeholders, but that's the primary stakeholder that, frankly, I serve. So I think to that end, we believe that the asymmetric potential risk return of Bitcoin mining at this point in the adoption cycle still provides what we think will be the best returns over time to shareholders. That's not to say we won't look at things like AI or certainly lots of innovative ways to integrate with the energy generation industry over time. That's sort of all things we look at. But at this point in time, I'd say somewhat different than some of the other folks here. We're very much focused on mining with the best possible unit economics and focused on Bitcoin mining.
Yeah, I mean, our background's from the energy infrastructure space. And so that's what, for 20 plus years I ran around the world trying to figure out where to put power onto the grid and how to do so the most efficiently, both operationally as well as kind of identifying it. And so that remains our focus. And as we look at kind of where we are today and where things are going, we think there's going to be more demands for power to support data and high performance compute than there are going to be places to actually run it. And so we're really focused on ensuring that we're identifying those best possible locations that have the lowest possible cost and have the highest kind of zero carbon, characteristics of the power associated with it. And so that's where we are, and we know where we'll play. If you look at the two sites we have, one of the sites is in the middle of Pennsylvania. It's adjacent to a 2.5 gigawatt nuclear plant. And the very first customer at that site was us. I mean, I sat there and worked with the owners of that facility and educated them on what Bitcoin mining was, the value of having a large load that could kind of sit adjacent to this large kind of power generation station that wants to run 98% all the time. And who was the second customer that came to that site? Amazon. I mean, so they now have looked and said, hey, you know what? This is actually ingenious. I mean, this is large scale power at a low cost that has a zero carbon source. And so as we think about where we are today and where we're going, it's going to be continuing to focus on, again, bringing that infrastructure, that energy infrastructure that's going to support both Bitcoin mining. Again, we have a long way to go at our sites, as well as some of the other things.
Well, you're bringing me to my next question, because there have been some reports that the competition to secure favorable electricity rates with utility companies, it is getting stiffer due to these massive data centers for AI. They're drawing in large amounts of capital, and they're really, I'm reading, keeping electricity bid 3 to 4 times what you guys were paying before, potentially. So these AI companies obviously are very well funded, potentially willing to pay more than Bitcoin mining companies. So how are you guys dealing with this, preparing for the future and navigating this emerging challenge?
The challenge with the AI LLM training sites is they need very sophisticated network infrastructure, and they need very high-speed access to the internet to get the data in and out of their systems. And so that limits geographically where they can locate, because typically it's near metropolitan areas. Now, the state of Virginia has just put a moratorium on data centers. So not Bitcoin mining, data centers, because there are just too many of them in the state. And as you move from Netflix and kind of cloud provider and hyperscaler to AI, the power consumption goes up by factors of magnitude. And so now all of a sudden you have this direct competition. Most AI guys are willing to pay 8 to 10 cents a kilowatt hour, where a Bitcoin miner ideally wants to pay 2 to 3.5 cents a kilowatt hour. And the difference is we can curtail, they can't. We can locate where there are low-speed internet connections or no internet connections and use satellite connections. So Bitcoin miners are being pushed to the edge, basically.
Interesting.
Well, I think there's a way for us to work together with, it doesn't have to be either or. I think there are some sites, especially some very large sites, where you can combine both AI and Bitcoin mining, not in the same buildings with the same data centers, but with the same substation. I think there's ways of taking advantage of that. So, but they're very different businesses in terms of the expertise that's required and the economics. So, but Bitdeer is getting into AI at a modest level initially, but we're looking for partners and are speaking to several people. We think there's a lot of synergy in a lot of what we're doing and what AI can do, including even our chip development. We think there's some crossover there. So
something about AI is, I think, if you look at what we have, they want. Ultimately, they're willing to pay more for power, but they don't have to. And so I think on a long-term basis, it actually helps increase our asset value. But because we are a flexible load, I think we're a lot more friendly to utilities. And utilities understand this, actually want us there versus the data centers. Georgia is also another state. It just removed the sales tax incentives for data centers. And it did so because there was so much demand that they did not want them to come in. And so that was a point of attraction, so they removed it to avoid these big AI data centers coming in. Because again, they hog the energy and they hog it 24/7 with an inability to be interrupted.
And not a lot of people are talking about their energy use compared to the Bitcoin mining
Oh, and it's substantially more, substantially more.
But I think a lot of that's changing, right? So everyone's saying here, they're willing to pay more, and I think traditionally, the data center operators, whatever the cost of energy was, the cost of energy, it was a relatively small portion of their overall cost base, and so they didn't really focus on it. If anyone is to believe the amount of demand that AI is going to pull, and for it to be as pervasive as people say, the cost has to come down. They can no longer continue to pay 10 cents. And so I think, part of the discussions that we have, that I have, I think the Bitcoin miners are the kind of leading edge of the spear, because we are demonstrating how you should do this. And curtailability, people have talked about it. And I think there's curtailability and kind of backup power supply. Traditional data centers want to have a diesel generator sitting at the site to be able to support the data center, if power kind of goes out. Both of the, the curtailability has to be embedded into it. And I think more and more as the forward-thinking, players in the space think about how they're designing their LLM models and how they're supposed to work, they are thinking about how do we curtail our loads. And I think that's going to be pervasive everywhere in the next, 2-3 years. Yeah. And the second thing is this idea that you have to have a backup generator at the site, and you have a centralized place where all of your activities occurring is, I think, also going to change. And so if you think about Bitcoin, we talked about decentralization, and while we may not have as much decentralization as we want, it is the most decentralized secure network that exists. And so likewise, the trends that we're seeing in the AI space are that compute is also going to start to decentralize. And so those players that are going to be the most successful in that space are going to be able to have to reflect on, hey, how do we curtail so we can kind of drive down our costs? If we drive down our costs, it's going to be more pervasive and more used. And second, how do we make sure that we can decentralize our compute? And again, Bitcoin miners have a lot to be able to talk about with respect to that. So we actually see from an infrastructure perspective a number of parallels on where Bitcoin has been and where, at least I see kind of where the AI demand is going, because if it's going to be the same as it is today, it's not going to be what people think it is. Just physically, it's not going to work.
One thing that changes the economics here is that right now, if you establish an AI data center, the overwhelming cost or the overwhelming amount of capital goes to NVIDIA. And that's because, so it's just so large.
Just like Bitmain.
Just like Bitmain. It's so large that the cost of electricity is sort of just a footnote at the bottom. But that's going to change as NVIDIA faces competition and the cost of that capital drops dramatically or significantly, then the cost of electricity is going to become more important. And so, of course, the big hyperscalers are developing their own chips. I'm sure AMD will come up with a reasonably competitive chip in, the not too distant future. So I think that whole economics of AI will change, and electricity will become a more important part of it. So I agree with Nazar on that. I think that, they're not going to want to spend 8 or 10 cents in perpetuity.
But it's a two-step process in AI versus Bitcoin mining, which is a single-phase process. In AI, you have to train models. That requires this density of power. Once you deploy a model, you can deploy it at the edge, and it can run with curtailment options because you load balance across multiple edge nodes. But the learning has to be centralized. And so while we are still ingesting huge volumes of data and sorting out all the copyright issues that are being created by that, you have these large data center needs. But even once inference becomes the primary consumption of AI versus learning, new knowledge is going to have to be incorporated. And so I really don't see this in the next 10 years declining back to a place where Bitcoin mining and AI can sit side by side at similar costs with similar characteristics.
The other thing about AI is that right now people are using a technology that's several decades old for training, right? It's just been scaled up. And there are a lot of really interesting work going on how you can get by using far less compute to do the same thing. And eventually somebody's really going to have a breakthrough there. And then you're going to see the level of compute required to do the same training drop dramatically. So I think we're at the very beginning of AI in terms of this scaling thing. And I definitely think there's going to be disruptive technology that we see over the next few years.
The other thing not to be underestimated is how long it's going to take to build these data centers. So everybody's talking about what they want to do, But again, these data centers are fairly complicated buildings with cooling and everything else that goes into them. I don't see it disrupting our space for at least 2 to 3 years, and that would be very quick compared to how most of these projects go. So we could be talking about this maybe impacting us as we approach the 2028 halving.
But to Zach's point, you mentioned this earlier, Zach, I think what is true, right, is that for all of us, I think the infrastructure that we have is not being properly valued because there is a real alternative use case for it, and we can see clearly, just with recent transactions, that people are willing to pay a lot more for it. So I don't think of it as kind of a zero sum, like it's either or, it has to be zero sum. But again, I think what we are doing highlights again the importance of the energy infrastructure and how that can play out in kind of alternative use cases as well.
Best thing, I think, is that the AI lobby, which has much deeper pockets than the Bitcoin mining industry, is going to be lobbying the government in the US, FERC, et cetera, for more transmission capacity, more interconnect capacity, better internet, et cetera, all of things that are beneficial to us. The challenge is going to come at the local level where they're going to be lobbying for their use case for a limited amount of power versus our use case. But I think overall, it bodes very well for the electrical infrastructure in the US.
It'll be interesting to watch these developments. I really want to turn now to discussing the risks about centralization, because many people are concerned about centralization within the mining industry, from everything within ASIC manufacturing, the chip manufacturers, mining pools. I mean, mining is distributed around the world. There are miners everywhere, but there are very few mining pools. So how legitimate do you think these concerns are, and what are the potential long-term consequences and industry solutions to maintain decentralization?
Well, very legitimate concern, because you have two pools that basically together could collaborate and do a 51% attack if they wanted to, one of which is an offshore pool. We operate our own pool. We do it because we prefer having control of our own destiny. It's actually not difficult for people to operate their own pools. They could do it. The problem is the economics. If you're a small-scale miner, the likelihood that you're going to win a block in your own pool, while statistically the same as you would in a big pool, the difference is instead of getting small portions of everybody's hash rate, you're now dependent on getting a block maybe every month versus getting a little bit of every block that's been won during the course of a day by a big pool. So a lot of people opt not to do it. But most of the foreign countries that are mining Bitcoin as sovereigns are operating and beginning to operate their own pools because they don't want anybody to be able to restrict them from transacting their Bitcoin. And over time, that's going to become more and more important. As we see this long tail of Bitcoin mining with intelligent devices in places mining Bitcoin, the whole concept of pools will again become very decentralized. But a pool is really an orchestration layer. As stratum 2 becomes more prevalent, then the miners are really in control of their own destinies, and that whole concentration issue of pools disappears completely. So I think this is a moot point long term. There's a transitionary period where there's some concentration, but I don't think it's a big issue.
And with stratum, hopefully that reduces any chances of censorship at that block level.
Yes.
A lot of people are concerned about that.
Yeah, I mean, I took a knee when I became CEO of Marathon in 2021 because our pool could filter out OFAC non-compliant wallets.
Right.
The fact of the matter is, Bitcoin don't have serial numbers, so you're tracking based on wallets. You can take a pristine wallet and pollute it with some dust from a wallet that's on an OFAC list somewhere, and now that wallet will be on an OFAC list. And so filtering based on wallet addresses just doesn't work. As much as the government in Washington would love to be able to do it, I think there's some people in Washington who, over the age of 55, don't really understand that Bitcoins, just like the dollars in their bank accounts, don't have serial numbers. People think that, well, no, my dollar bill there at B of A has a serial number. It does not. It's fictitious. It's just a ledger entry.
I don't think the centralization concerns are near the top of my list, to be honest with you. I mean, I think the point is, to expand a little bit on what Fred said, a miner can switch what pool it's using basically instantly. So if there's concern that there's a regulatory body that would capture the pools that have the hash rate and then corrupt the network, it's not really a risk in the sense that as soon as that happens, all the hash rate will flee that pool. And while it's not optimal for smaller miners, to Fred's point, to run, effectively their own pool and use their own hash rate directly, it can be done. I mean, the people at this table certainly could do it, right? You would introduce more volatility to your returns, but it's something that can be done. So like, that is not something I lose a lot of sleep about, the sort of capture of the pool. If Washington got really adventurous on wanting to filter transactions at the miner level, it starts to get scary, because then you have questions as a U.S. public company, like, are you complying with that regulatory body or not? But then on the other pieces you referenced, the ASIC manufacturers, things like that. I do think one of the benefits of getting to this industrial scale level of the network is that it's really prohibitively expensive for something like that to try to capture the network. I know Bitmain's very large. They're the largest rig manufacturer. They run a lot of their own hash rate. But I still think there's enough diversification. It's not something I lose sleep about. The other thing is, if you are that large, think how much value you have tied up in the value of the network being decentralized. By capturing it, you would instantly destroy your own value. So again, I'm sure there are edge cases that people worry about that I think this is it's interesting to discuss, but I haven't found something that gives me great concern yet.
And at the ASIC level, there's more diversity in ASIC availability and machine availability today than there was at the prior halving. This is the first time Bitmain, MicroBT are on the same kind of cycle, where before it used to be kind of a flip-flop. Now MicroBT is, they've taken some serious market share from Bitmain. Riot has gone all in on MicroBT. I'm sure a number of the large miners have ordered MicroBT machines. I know we have. But we think the diversity is great, because now you're starting to get to a place where you'll have a specific miner model for a specific use case. I need something that's liquid on ASIC cooled. I need something single phase immersion. I need something dual phase immersion. I need something that's air cooled that can operate in 50 degrees C ambient. All of those types of things will just breed better variety, better selection, and make the industry much healthier.
Yeah, I think that ASIC mining manufacturers have gotten more diverse, certainly than 4 years ago, and we're adding to that. There is still a concentration, and I'm not sure anything can be done about it if you go down one step lower. I mean, everyone's still using TSMC as their source. I guess there's one using Samsung, but that's sort of small. But that's, that has a concentration effect on many different areas, not just Bitcoin. So I think that's something that needs to get handled, but it's got to be done at a larger level than just Bitcoin.
Bitcoin miners defend Taiwan.
Yeah.
And centralization is all relative, right? I mean, I think with the ethos of Bitcoin is, everyone has their laptop and the world's completely decentralized. And so are we at that end of the spectrum? No. But versus any other network that's out there, the level of decentralization that exists, we think is actually profound. And, to both Tyler and Fred's point, I mean, I would say the 5 or 8 largest Bitcoin miners 3-4 years from today will be running their own pools, right? I mean, it's just kind of a scale and a matter of time that's seeing. So some of the concerns I think are, again, so the other folks have said here, not real. And again, I think where we can continue to highlight the value of Bitcoin is, again, compare our centralization, as you want to call it, against any other network that exists. And by far and away, the level of decentralization that exists here is, again, unique.
And that positive incentive system that really works for us as well.
I agree with what everybody said. So rather than repeat agreement, I think maybe I'll talk about practicalities, because I think that's maybe insightful, is how are we actually addressing this? So we actually have 3 backup pools. So we operate on a foundry, which is one of the big ones. But we are ready at a moment's notice, if we ever needed to fall over to another pool. We also will have our own mining pool at some point. Pools make it easy. It de-risks things. It takes the volatility out. But especially in a high fee environment, there's no reason that all miners of large scale will not have their own pool. It just won't make sense, because all the other pools, the high fee environment creates risk for a mining pool that's the only service they provide. And so they have started to change the rules to make the fees ultimately lower to what they pay out. That's going to give us the incentive also to further diversify into all of our own pools on a long-term basis. So I think on a practicality point of view, all the pieces in place, I'm sure all the other miners have backup pools upon backup pools too. And then I think actually there's an opportunity in where there is some concentration related to the actual ASICs themselves. because being a believer in competition breeds a better product. And so I think that right now you have small groups that have an aim to take out the big guy, which is Bitmain right now. And in looking at it that way, they're going to have to beat them. They can't just catch up. And so I think if you take scrappier, smaller companies and give them an incentive to not only catch up, but to pass, that's what's going to make them successful. And I think that's good for all of us. So I think it breeds really solid competition as the environment is right now.
Some of you brought up Washington, so I have to ask you about President Biden's latest budget proposal because it raised some eyebrows in the community, laid out plans to bring in more than $2.3 billion in the next 5 years, and they want to tax Bitcoin miners potentially 30% for energy use. I would love to get your reactions. How are you educating policymakers to support this industry as opposed to proposing such extreme legislation?
I think part of it is a question of we have never taxed the use of a commodity by a specific industry type. And so this is something that if it were to be enacted into law, would go to the Supreme Court very quickly, not just by our industry, but by lots of other people who would just view it as a perfect case of government overreach. And so I don't worry so much about it happening in that way. Plus, very quickly, people will say, well, wait a second, the AI industry is also a big user of energy. So if you're going to generate a tax and you want revenues for the government, focus on the people who are really doing it. Go across all data centers, make it fair. So I think if it were to come into fruition, it would be highly watered down. In its worst case scenario, would it drive the industry offshore? Sure, you raise the cost of doing business by 30%, you're going to push everybody offshore. So you have to kind of hedge your bets. We have no idea, for example, whether the Biden government or a Trump government would want to prohibit the use of Chinese technology, period. Not just imported from China, but Chinese origin, manufactured in Malaysia, Indonesia, Thailand, Mexico, wherever, being used. We don't know those things. And so you have to, as you scale, the risks and downsides of these types of issues become bigger for us. But educating Washington is really just about knocking on a lot of doors, talking to staffers who can educate their bosses, because the bosses really don't get it. Other than a few limited number of people who have actually done the work to study and learn, the vast majority turn to a staffer and say, what do you think about this? And so you have to educate the staffers, and it's just a lot of door knocking.
Great point.
I'm pretty sanguine about this news in the sense that, I'm firmly in the camp that generally everything's good for Bitcoin. In some ways, the fact that this is used for headline attention grabbing sort of validates our industry's arrival in a lot of ways. I mean, the Bitcoin mining, the miners are now protecting $1.25 trillion of value, and that's after a recent sell-off. So this is a real industry with real companies and real budgets, providing jobs, paying taxes at the state levels. And if it gets more and more attention, in some ways that's validating its arrival as like a part of the firmament. That doesn't really answer your exact question, which is what do you do? And of course, I can agree with Fred. Like, we try to be proactive. We work with different lobbying organizations to point out these very bizarre sort of questions about why is this industry being picked on? It doesn't make sense. And it rhymes with the discussions we've been having for years about, like, what about Christmas lights? They use more energy. And it feels very similar. I think the one other thing about this particular issue is that it does reinforce, like a lot of these things, what happens with increased competition with AI, what happens with the halving schedule, what happens to all these things. It reinforces why building a sustainable business model as a miner needs to focus on those unit economics and having the lowest cost to produce you can create. Because let's say they do pass a tax, that's going to favor the people with cheaper energy more than anyone else, right? So I don't think it instantly means it would go all offshore. I mean, I'll talk my own book a little bit, but we're known for having very low power costs. Of course, we would not want to support any kind of tax. If something against everyone's better efforts, if somehow that happened, okay, we'd still be cheaper than most people are today on their power costs. So it reinforces yet another reason on the pile why the industry has to be more efficient over time.
We're not very worried about this exact legislation getting through. I think if something gets through, it'll be very watered down from this and probably much better. I think one of the side effects of the ETFs that will have an effect here is that as more and more people get involved with Bitcoin, it'll be much harder for politicians to enact legislation specifically against Bitcoin. Right now, there are fewer people involved, but when it's your grandmother and a bunch of other people have investments in Bitcoin, it's going to be very difficult for a politician to take a stance just against Bitcoin.
I mean, this isn't the first time this same tax was proposed, and so as other people are saying here, it came and went. I mean, I think it's important to think, a lot of times in the Bitcoin space, we preach the choir, right? We're all believers, we're all very passionate about it, we believe it brings good. And I think that's true. When we are engaging with those that don't have that same view, though, I think we as a community, and point my finger at myself, first is, I think we have to be more engaging and more transparent. And a lot of times, what I think happens is the second we see some sort of pushback, we kind of retreat. And sometimes it's justified. I mean, the whole EIA fiasco, how they went about trying to capture information, So sometimes, while it may be justified, sometimes I do think that the burden should be on us to be able to kind of educate. And if we're more willing to engage in a more transparent way, and in some sense demystify what we're doing, even today, it's shocking to me that when I actually talk to people and tell them how does a Bitcoin mine work? What do you do? They're like, that's all it is.
Yeah.
And so the demystification of what we do and how we do it, I think is important for that kind of, adoption and interest. And so all those staffers and all those kind of representatives and senators can have a much clearer understanding of it. Because a lot of times right now, they're going on a premise that's probably as far from the truth as possible because there's just some concept in their mind and they haven't really been able to engage. And so I think, we have a burden as a community to, be more open and transparent and trying to engage. And again, I completely understand that a lot of times we're not reciprocated in that. We're gonna have to deal with that. But at the same time, I think, again, the more we can do that, the more we can kind of address some of these things. And over time, you'll just start to see that, and I tell people all the time, there's a right way to mine Bitcoin and there's a wrong way. Not all Bitcoin mining is perfect.
Yeah.
If you do it in a certain way, you can increase costs. You can have problems, right, to the grid. And so I think the discussion we should be is yes, there is a right way to do it. And by the way, that right way to do it is also the right way to integrate large loads of any kind into the grid. And let's talk about all of that. We're more than happy to talk about what are the parameters and how this should happen. And so I think we have to work together to kind of, shift the discussion that way. And if we do so, I think that those that are engaging with us will start to see that we're really kind of an asset as a part of that discussion rather than kind of an adversary.
I think a big part of this, I don't think the conversations happen in Washington. I don't think that's where the meaningful conversations happen. Where they happen is what we refer to as our front door approach. It's about having the community that you operate in understand Bitcoin, what it does and how it's benefiting that community. When that happens, that's a community that then isn't complaining upstream to anybody else. Because one thing we know is politicians are always looking for a headline. And so we think the most important thing that we can do as Bitcoin miners is not be the headline for the complaints, whether it's noise, power, all the other lists, that everybody loves to publish. Instead, it's about being the good citizen right where you live. It's about using the local workforces. It's about making an impact where it matters, because then the headlines don't happen first. And then the second is bringing the senators or bringing the House of Representatives to then cover those communities into the community. I think walking a senator through a Bitcoin mine is really what should happen. I think all of us have engaged on Capitol Hill. But how many of us have walked senators through our facilities? I know it's one thing that we're really focusing on, because I think the grassroots side is where it's going to matter more. Because also, once you can touch and feel what a Bitcoin mine really is and experience it, everything starts to make a lot more sense.
While I don't disagree with you, I think it's very important to do the grassroots.
Yeah.
That works really well for the politicians in the states where there is a lot of Bitcoin mining. So in your case, in Georgia, Texas, North Dakota, but it's less than 10 states. The problem in Washington is you have members of Congress, influential members of Congress, who write letters, like Senator Warren, to people like the head of the CFTC now saying, you had meetings with Sam Bankman-Fried, you need to report on this. Well, hey, her whipping dog, Gary Gensler, had a very near relationship with Sam Bankman-Fried's family. And she's not crowing about this. So politicians in Washington are, let's just say, soapboxing this issue. There are 50 million voting Americans, or voting eligible Americans, who have owned crypto or own crypto. They happen to all be under the age of 45 for the most part. Most of the members of Congress are over the age of 45. You have a generational shift that's about to happen where the crypto savvy, the crypto willing, the crypto wanters, like my kids, millennials, for example, who all have invested in crypto before I even got involved in it, this is an issue for them, and it's something they really want. And I think that's when this is going to change. It's you start getting the old guard unelected all of a sudden, and they lose office because some crypto bro took their seat. That's going to be an issue.
And many people do feel that we need a generational shift in Washington.
Absolutely.
Well, that's going to happen no matter what, because they're pretty old. And yeah, I think there's also a change in our industry, right? We started off as a small, scrappy industry, a little belligerent, and you know, we didn't have that much impact. So we were sort of ignored by politicians. But as we grow, as we mature, you know, we're going to have an impact. And like any industry, people are going to say, hey, what are you doing there? You know, it looks like you're impacting my daily life. And so we have to learn how to just sort of work with that. I like what Fred said about working with politicians. I think that's really important. As the industry matures, it grows. You know, we live in the society. We have to be able to engage with the people that we've elected. And I think just in a more mature way, you know, everyone's not against us. You know, we're not fighting this uphill battle. There are a lot of allies, and there are people who are yet to be allies, right? I mean, I think we overreact a lot of times, and I think we can just be more calm, more chill, and realize that a lot of people don't understand, and maybe we need to change some things too, right? We're not right about everything, as much as we'd like to think that, and so let's engage with the wider society and see where that takes us. But, you know, we're here to stay, I'm sure of that, so it's everyone has to adapt a little.
Those are fair points. I had the chance to visit Capitol Hill to educate on Bitcoin, and I was encouraged by a lot of the people I met in Congress who actually did seem like they understood Bitcoin, and they were for favorable regulations that encourage Bitcoin mining to grow and to stay in the United States. And then I was disappointed by some of the members of the Senate. Obviously, a lot of people are familiar with Elizabeth Warren's stance, but also with the Biden administration. And I think that there's nothing less American than trying to decide what is good energy use, right? Because it won't stop at Bitcoin. They'll start looking at who can fly planes and who can, you know, be a tourist and whether you can use your washing machine. So we do have to, I think, be really thoughtful about making sure policymakers are aware of our industry and what we're doing.
Funniest thing I find is the people that say Bitcoin is not a good investment. I mean, if you looked at the performance of Bitcoin over, pick your time period, it's been the best. And yet you still have people that say, we're looking out for you and you shouldn't invest in Bitcoin because it's not a good investment. I mean, to me, that's the most kind of, you know, kind of damning of them all, is because literally the data is the data. Just, like I said, pick any time period you want and look at the performance of Bitcoin. It outshines anything else. And yet they still try to tell people it's not a good investment.
And the fear that Bitcoin is going to displace the US dollar is so unfounded if you were to look at it. If anything, Bitcoin helps the US dollar gain dominance. It's, you know, a curious thing. Tether is the single biggest contributor to the US dollar growing a little bit again as a reserve asset because they hold hundreds of billions of dollars in treasuries. And, you know, they have supplanted Japan as a buyer of US treasuries. And I think over time, people are going to get it. You know, we're in that transitionary phase where, you know, the next buggy whip got invented and then somebody invented a car, or, you know, people are going to put the 12 propellers on an airplane versus starting to use jets. It's that transition period we're going through.
All right, well, we have to start to wrap up, but I'm going to ask you just very, very simply and directly, why should someone invest in a public Bitcoin mining company as opposed to just buying Bitcoin?
You're investing in all sorts of things depending on the type of exposure you want and volatility you want. So you can invest in gold or you can invest in gold miners. Warren Buffett has chosen to invest in gold miners because he prefers having the ability to, in an upswing in price, maximize the profit potential, because a miner has relatively fixed costs. And if the commodity they're mining goes up in price, then their profit margins increase. If you're mining Bitcoin, it's the same thing. You look at historically how Bitcoin miners have traded versus Bitcoin. Bitcoin price moves 1 or 2%. Bitcoin miners move 3 to 5%. There's beta. And there are certain traders who like that beta. For the average consumer, they may not like that added volatility. And so this type of additional volatility is very attractive to people on Wall Street, hedge funds, they trade in and out of our stocks. We're highly liquid, most of us. We provide a great ability for them to go long Bitcoin, short a miner, do vice versa. And now they're doing it with ETFs because ETFs settle T+1. And so now they've found that they can do this with ETFs nicely. I think post-halving, you'll see the money will start flowing back into Bitcoin miners again.
And I think there's a reason that that happens. Why is there that beta? It's the only place, unless you're mining Bitcoin yourself, that you can gain exposure to an entity that's buying Bitcoin under spot. Otherwise, if Bitcoin is 50,000, 70,000, 200,000, $1 million at some point, a miner, generally, if they're running profitably, is the only place you can gain exposure below that spot price. And if that miner then adds it to their capital stack and structure, you get that benefit as a shareholder. So I think that's why miners become a really interesting place, and that's why you can get that beta on the trade where you get more than just the upswing in Bitcoin's value. The other thing is I think it's an interesting place that we're going to see happen from just an investment standpoint, this flight to quality. Right now, there's between 21 and 25, depending on how you measure, Bitcoin miners that are publicly traded. And I really see that consolidating to a much smaller group. And then that group is going to be able to be stronger and able to be able to do more in the Bitcoin mining space and therefore produce more Bitcoin, lower cost structures, things like that. So I think that it's a really interesting time to get involved. And, I think all of us own Bitcoin and believe in Bitcoin directly. But I think for myself, I think it's a great investment point because it's the only place to get it for less than you would be able to buy it directly from somebody else.
The other piece, I think, beyond the levered exposure that's been referenced, which I think is pretty obvious, people can see that. As an investor, you do have now long exposure to some of these other themes that are somewhat independent. So the next ordinals type thing makes transaction fees blow out and they stay elevated. Miners are being paid transaction fees. The world starts to appreciate the value in a location agnostic, large user of electricity that's instantly curtailable. There's a ton of value that's underappreciated in that. That sits within the mining companies. So to the extent they're developing their own tech stack to monetize that, there are, what I'd call related but somewhat orthogonal investment themes that you can get exposure to in a miner that you can't get in Bitcoin directly.
Yeah, to build off Tyler's point, I think there's a number of free options embedded within these companies. Yep. And so everyone looks and says, what's your hash rate, how much you produce, and so we're making Bitcoin, we're making money. But embedded within that, again, whether it's energy transition, there's a massive shift happening in the energy space. And the power market is, many multiples of what the Bitcoin market is. We are playing in that, and there are services we're providing where they're effectively free options kind of built into that. From a tech perspective, again, the curtailability of our loads and how we do that and how we bring things back up is going to be applied in other places as well. And again, free options, and all of us are spending time thinking about how do we do that? What's the technology? What's the software? How do we actually implement that? So again, there's a number of free options embedded in here. So it's not just you're buying Bitcoin for below spot, but then also I just think there's a number of embedded free options in here that you just don't get by buying Bitcoin. All that being said, everyone should buy Bitcoin before you get your whole Bitcoin while you can. But again, in addition to that, the miners I think provide a unique way to play the space.
Yeah, I agree with everything that's just been said. I'd say in addition to that, in terms of Bitdeer, we have really a technology angle where we feel like that's going to add a lot of value above and beyond just the mining that we do, which I think is, clearly a good thing to invest in. I think as part of a balanced portfolio, Bitcoin mining, and I think it's sort of a good balance to have.
Well, from 6.25 Bitcoin to 3.125, I hope one of you maybe perhaps got the first Satoshi in the halving. Thank you so much to my thoughtful, intelligent panelists. Thank you so much to the Human Rights Foundation and to Bitcoin Magazine for our production. Coin Stories is brought to you by Bitdeer. Thanks so much, and check out our next episode next week. Thank you so much for checking out this episode of Coin Stories. If you're listening on the Fountain app, you can show your support and share your thoughts by sending a boost. Last month's top episode on Fountain was with Michael Saylor, and I had @JoeMartinMusic boost 1,000 sats to say, sounds like Saylor is describing Nostr when talking about identity. Is he purple pilled yet? Well, if you're asking if he's on Nostr, yes, he is, @Saylor. I love reading and replying to your boosts, so download Fountain on iOS or Android today and make sure you subscribe to Coin Stories. This show is for entertainment and educational purposes only. Nothing should constitute as official investment advice, and you should always do your own research. My inbox is open if you want to share feedback or guest suggestions. Just reach out at Natalie@talkingbitcoin.com. I'll see you next time.